Hello, hello, hello. Welcome to Al Stock Trades. Now, we're starting this video a little bit earlier than what we intended to, but hey, the earlier the better. So, for everyone listening at the correct time, which is, I believe, 2 hours from now, I hope you're doing great. So, what is this video going to entail? Two things. We're going to go ahead and do an intrinsic value calculation or explain the intrinsic value calculation regarding three different types and pretty much give the reason. Now, if you haven't realized, I just went ahead and first off, if you can, please publish this on StockTwits, share it with your friends, Webull, whatever you have you. So what we're doing right now is we just created a new Reddit page. Unfortunately, there's been a lot of folks being silenced and a lot of censorship has been going on in terms of the Clover Health. So we went ahead and created a new Clover Health Reddit page, Your Voice Uncensored. And it's just, a very nice, fresh start. I think the moderators have been a little trigger happy. There's going to be essentially no censorship here. If there's anything that talks about race, gender, Islamophobia, what have you, you're gonna get instantly banned. But anything with if you want to talk bad about the stock, you can go ahead and do that. If you want to talk good about the stock, in fact, one of the criticisms I had was, this is going to lead to more manipulation. Listen, it's up to retail investors to read and due diligence, and do their own due diligence, right? As you can see here, Reddit content isn't financial advice. Perform your own due diligence. So what we're going to do is, if you haven't realized, earlier today, we already did the price target projections, and we're going to essentially go with them one at a time. And then we're going to go ahead and give you the reasons. Now, first things first, we're downgrading the Clover Health price target from $25 to $12.25. Here are the reasons. If you want to go ahead and pretty much, look at this more, you can go to our Clover Health Reddit page, which there'll be a link down below in the YouTube description. But before we get there, we're going to go ahead and look at the three different types of intrinsic value calculations and explain, because that's where kind of the meat is. So we're going to go from worst to best. Okay. So normally, if you look at a company that becomes free cash flow positive, it's historically been around 5% of the revenue. Okay. So if we go ahead and look at 5% of the revenue, and before we actually go in, I'm going to just go read the comments really quickly. I'm missing, is that a beard? I honestly, I get really itchy. It's only 88 cents. It definitely is. And I feel like we'll explain book value on another video, but it's definitely a good point to make on that, which we will go in. Might as well downgrade it to 125. So, Mr. Shantz, what principles are you downgrading it to? What intrinsic value calculation, book value calculation are you using? Again, you want to be a little bit more evidence based, but I would love to see your calculations. Okay, so first things first, what we're going to do here, guys, is we're going to look at the first picture here, which is 5% of the revenue. So historically, when you go in and look at a company and its free cash flow, it's usually 5% of the revenue. And what we did here is we took the revenue for 2023. We're going to approximate it to be 1.2 billion. Now you might ask yourself, well, Al, didn't they indeed have a $3 billion plus revenue in 2022? Exactly. But they're actually down regulating their revenue this year because of trying to become profitable, right? So we took account of this and we did about 0.5. Now here's the trick part about this is, how do you calculate the growth rate? Now their growth rate could be different in 2024, right? Their growth rate could be different. But based off of this, what I did is they filed an SEC S1 filing before they went public, and they had around $291 million in 2018. And originally, when Clover Health went on this path, they're actually going on the correct path, but then they got really hungry with wanting to expand. And then they expanded so quickly to a point where the market basically turned on them. And and it's not their fault. You can see Silicon Valley Bank even messed up by essentially locking in 10 years worth of low interest rates, betting on the Fed to not increase interest rates at what they've been right now. So we took 2018's S1 filing and brought it to 2023's and found a 33% growth rate, which, if you look at past videos we made, its approximate growth for Medicare is going to be around 30%. And if they're going to 25 to 30%, and if they're going to be growing more than average, then perhaps 33% will be more of their liking. And we know they can turn on the dial to increase more, which they've already done, as you can see. But that probably won't happen until Clover becomes profitable and the economy and the interest rates drop and money becomes cheap again. So what we did is we took 5% of the revenue, which is 60%, or 60 million. And we took these 60 million and projected it out to 10 years and discounted back at a 10 to 15% discount rate, even a 22% discount rate using a 2% perpetuity model. So these are the worst price targets. The recession level is, and I could have scrolled down here, but this is, hits the message. A recession level of $3.42, a bear case of 7, a base case of 9, and a bull case of 14.62. Now, listen, guys, the stock is currently trading under $1, and to me, it looks like an easy high risk play once they become profitable. It's just easy money. But again, a lot of folks that are really upset, the ones that are really upset, bought at $15, $20, $25. And if if you would have done an intrinsic value calculation back then, even at those prices, you would have maybe 3x. There's other parts of the market where you would have done that anyways. So I would say those folks that did that, unfortunately, did not do a good intrinsic value. So based off of this, this is what you get for a 5% revenue multiple. Now let's go ahead and do backspace here and look at the next post, right? The next post, it's kind of funny. I got 8 votes on the 5%, 6 votes here, but I got 10. I was hoping they go in ascending order in the matter of the stock price, but that didn't happen, but it's okay. So what I did next is I took Humaina's revenue multiple in comparison, not revenue multiple, but revenue to free cash flow. And it turns out that Humaina operates around 6%. So whatever revenue they make, it's approximately 6% goes to the free cash flow. Now we can do United Healthcare. We can do that next. But overall, I would say Humaina is a company that you want to associate it with. So by doing that, you get a price target of anywhere between $4 to $17, right? And then again, the same thing. We did the same S1 2018 to 2023. We skipped 2022 because the revenue is higher. So we wanted to get a more accurate representation. So we just kind of basically booted 22 out because that would have essentially increased the growth rate. We wanted to be a little bit more, decreasing the growth rate. Now, last but not least, the highest stock price. Now, what is this? Well, this is 14% of the revenue of the, that turns into free cash flow, right? So normally if you look at a SaaS company, like for example, Palantir or other SaaS companies, they usually operate around 18, even sometimes 25% of the revenue going to free cash flow. So what I did is I took the 18% and I took a 20% margin of safety that more specified on the revenue to free cash flow and got 14%. Now, why? No, what is this 14%? This is if Clover Health brings out their SaaS company, if they become a subscription-based model, which they can basically lend out their Clover Assistant model, they're going to be treated like a SaaS company, which is indexed with the SaaS index, which is around hovering anywhere between 4 to 7, and in fact, some in 2020, which I think is never going to come back, was like 16 to freaking 30. So overall, this is the best case that you could see. Now, hold on. When you say best case, a lot of people don't understand intrinsic value calculation and what DCF is. My recommendation is just, try to Google it, try to understand what an intrinsic value calculation is. But this is basically using the price of the $1.2 billion of expected revenue in 2023. Could it be higher? Of course, in about 4 or 5 years from now, once we check this, we can go ahead and check it with the metrics that we think is going to happen in the next 4 or 5 years, which is technically 8 to 10 years from now, right? And you do that and you continue going forward to seeing and trying to predict what is that stock price? What is that range? And the more information the company gives us, the more we can send out these projections, as you can see, from 2022 to 2023. 2032, right? So that's pretty much how these work. And so now let's go ahead and talk about the reasons, and we'll go ahead and do questions. If you have questions, please drop them down. All right, so let's go ahead and look at new. And I just basically posted this for anyone that's interested in the new Clover Health. You won't be silenced. You can go ahead and talk trash about the stock. That's totally fine. It's okay. and it's up for the people that are on here to essentially figure out what they want, what they want to hear. But I think you should hear both sides. And obviously, if some folks are just not going to listen to some folks that don't sound logically correct, but that's fine. So for example, we had top 5 reasons Clover Health is going to zero. This is great. Let it happen. We want to hear what this person has to say in response to this, because my name's in here. Clover Assistant isn't real. The doctors that Alice who uses Clover was not being truthful, and likely doesn't. Okay, this is false. I'm the one who conducted the interview. Yes, it is true. So one is incorrect. And maybe something in here might be correct. I don't know, but if your first point, which is the number one point, incorrect, it weakens your topic sentence, if I might say, if it's your topic sentence and body and thesis statement, if you want to go back to English 101. But again, that's not for me to say. I can give you my opinion just like how you give me yours, but we're going to be freedom of speech here. Okay. So now let's go ahead and go to the price target really here. All right. So we're downgrading the price target from $25 to $12.25. Perhaps maybe the Clover Assistant Management Team or the Clover Health team can listen to this and perhaps can curtail their investment reports. And I'm going to give some criticisms here, okay, which I think are definitely valid. All right. So number one, this is more for you guys, right? So, they're scaling back their growth to achieve profitability. They have to, because the markets have changed. They'll be able to turn on the growth machines when inflation is tamed, the sticky icky inflation that they have, right? And then they can go ahead, and once interest rates go down, then they can go ahead and resume the growth machine. Number two, no information regarding technical aspects of acquiring revenue and free cash flow of their Clover Assistant model. Ladies and gentlemen, they have not given a lot of information regarding how they're going to pimp out. My apologies for being unprofessional, but how are they going to do that for Clover? How are they going to pimp the Clover? Right? How are they going to do the SaaS index? What are they going to do, and how are they going to do it? And we want a little bit more information about that. But it almost sounds to seem, from an investor perspective, it seems like, you guys don't seem like you have a plan for this. You guys don't seem like, and it's okay. Let us know you don't have a plan, right? But, don't say you're a technology company when in reality you haven't given us and shared with us how crucial this technology is. Or better yet, if you're afraid of competitors, you can say, we're not releasing this information because there's a lot of competitors. You want to be open and have an open dialogue with your investors. Don't be like Chamath Palihapitiya, who on the most recent, investor podcast specifically stated, well, you don't have to be, it doesn't hurt as much to be untruthful to your investors because you only see them once every 3 months versus the people you work with, you see them every day. That's a very terrible way of suppressing your guilt and kind of a, honestly, how terrible of ruthless Wall Streeter you are. But, let's not try to do that, because a lot of these investors have families and whatnot. So try to be more communicative. In fact, in our Clover side of our stock terminal, we have some amazing research here. If I may, let me just give me a second here. I think you guys would appreciate this. If you go to Clover and search the channel for SEC, one of our amazing members, Belize, and amongst others, showed us a form. And let me go ahead and zoom in on here so you can see this a little bit more better, right? Is it this? 8K? Yes, Mr. Zach. So they just brought in another person in the board, and his name is Zach Winberg. Now, beautifully, one of our members, Mr. Palm Jr., I believe he was the one, he asked Chat GPT-4 what was the significance of this person bringing on there. And Chat GPT was, GPT-4, which is connected online, was able to go in and parcelate who the hell this person is and how he could help Clover. But, Clover Health, listen to me, guys. Andrew, we shouldn't go to an AI to essentially determine why Zach is amazing. We should hear it from you. Look at Palantir. Maybe you should have another division or something that, communicate to your investors. I know you're focused on profitability right now. I was going to actually save this until the end of 2023 based off of your EBITDA and free cash flow. But I think, it's something that, maybe, this might be good for you guys. Try to communicate to your investors. Let them know what you're doing. Let them, if you have an idea, say it, right? But especially when you file an SEC filing, let your investors know, because I'm sure not a lot of investors heard about this because they just don't follow these forums and they're not heavy investors like we are on the stock terminal. Okay, so then I got that out of the way. Now, no solid communication on pathway to scaling a subscription-based model. Okay, we talked about that in the second bulletin point. Deflecting questions from analysts at their most recent healthcare conference regarding the Clover Assistant. Approximately only 1 to 2 minutes of their meeting. My apologies, can't spell here. I'm juggling so many things, guys. A meeting was to their proprietary software. Ladies and gentlemen, there's only 1 to 2 minutes of a 30-minute meeting geared to your Clover Assistant and you're a technology company. I mean, it really shows you the, focus that you guys have. We really want to hear more about the Clover Assistant. If you don't want to talk about it, let us know why you don't want to talk about it. Is it competitors? Is it X, Y, and Z? Because, we want to hear about this. How are you going to scale these revenues? And if we don't know and we don't hear about this, then this will never come true. Once they do get on this, then perhaps this will take into effect. Now, here are my little projections that I believe. So once the economy settles and it gets better, and once Clover Health becomes profitable and becomes self-sustaining and proves to investors, hopefully proves to them that they are indeed a company that has a correct business model. I spoke to a lot of chartered financial analysts that just could not stand behind Clover because they don't have a business model. They haven't shown that their business model works. They need to prioritize that. Show us your business model works. And hopefully once that happens, we are going to get, I believe, anywhere between now and, I don't know when it's going to stop. I don't think it's ever going to stop, but we are going to have an AI war, kind of like a spree. It's almost going to be like the gold rush. Any company that has a hint of artificial intelligence is going to flock so much money. And you know what's better? A company that's profitable. Okay. So we're going to see some crazy inflows if they do capitalize on this market. Because guess what? They're in a niche where it's healthcare, which we know that 10,000 Americans are turning 65 years every single freaking day. That's one tailwind that's literally blowing against their booties to basically ignite them into the fourth industrial revolution. They have the artificial intelligent landscape, which we know has just been basically rolled on upon people with the Chat GPT 3 and 3.5. And we know that's going to basically scale up. We already know that Palantir is basically, literally just stated that, the reason why Ukraine is still in the game is because of their software. So we understand how important artificial intelligence is. And I want to go ahead and talk about a specific video from the CEO of OpenAI when he basically said, and he referenced Putin's chilling statement, and Putin specifically stated that whoever owns AI and controls AI is going to basically rule the world, which is perhaps the reason why United States and the Pentagon instructed NVIDIA not to sell their high artificial intelligence chips to China. So as you can see, guys, there's a lot of movement happening in the background in AI, and we're going to see so many inflows in companies that have these type of technologies. But the problem is, just like one of our members, Mr. Money123, said on our stock terminal, we can't get to that level if they're not profitable, but most certainly if they don't have solid communication. Okay. So I hope this video serves as a good guiding light on solid communication. And let me go ahead and go to quick questions and let's go. All right. Let's go. Hello, Mr. Wheel Deal. There's a good channel. Check him out. He does options. Okay. Let's see here. Let me go, Mr. Shanksy. Went from 3 Credit Suisse prior, 14 to 7. Well, first off, don't cite Credit Suisse. They can't even get their own bank into an order. But again, you're citing analysts. Again, what do these analysts do, right? What do these analysts do? And if you actually look at analysts and look at their price projections, let me just go ahead and just prove this point because I think this will be a good learning lesson. What's a good company? Let's look at Meta, right? If we go ahead and look at and do our due diligence regarding analysts, let's look at Meta. I hope this one gives you the graph. Let's see. If you look at analysts, and if you would have, no, not this one. Hold on. Here it is. This is your so-called analyst. So if you look at analyst, it's interesting because once the stock price starts dropping, what do? They start dropping their price targets. It's just very funny. In fact, let's What's a company? In fact, let me go ahead and do another one. Let's look at snow. So you can see that as the stock price goes up, this is a Snow. It's another company that's a SaaS. As the stock price goes up, analysts project higher stock prices. And then as the stock price goes down, what do analysts do? They change it. The stock price goes down lower, analysts basically change it. And guess what's going to happen when the stock price starts going back up? What are analysts going to do? They're going to basically put their stock prices higher. So, Mr. Shanks, it may seem like these analysts are right, but they're late in the game. Once the stock dropped here this low, then they lower their price target, and you can see it's still higher. But then all of a sudden it dropped lower, and they lower their price targets even more. So I hope this shows you and it answers your question. Okay, let's go ahead and continue. Let's kind of go ahead. Answer this. Why did Chamath dump his freaking shares in the dark pool? Why? Do you have proof of that? We know that he sold some of his shares. He still holds based off of the filings. But if you can show me the filings, then yeah. But again, you're tracking Chamath. He did it in November and October for tax loss harvesting reasons. So I'm not too sure if you're referencing his other shares, which he's still holding. Okay. Let's see here. Okay. Okay, perfect. And I wonder how much this chat owns Clove. Yeah, I mean that's one of the things I was wondering about for the Clover Health Reddit page, which is why we created our own Reddit page, because we don't know how much influence they have over the moderators. But I can tell you right now, this Reddit page is pretty much completely uncensored. And if you guys want to trash the company, you can trash the company. If you want to go ahead and do good due diligence, you can do that, whatever have you. Okay. So, and that's the thing. Once the economy, the goal right now is staying alive, right? Any company that stays alive in this mess, they're going to basically grow at the rate of what their country grows, their GDP, alongside with the sector, which is healthcare. So this is going to be a very interesting deal. But already for right now, we are downgrading the price from 25 to 12.25 based off of the reasons I gave you. Now, if they can fix their situation, we'll continue. Now, what I'm going to be looking at in the next earnings report is their numbers. Are they profitable? Are they getting to profitability? What are they doing? And also 2024 Q1, well, how are they comparing to the new growth rate that they established from 2023? All right, ladies and gentlemen, I hope this was very helpful. I will see you on the next one. And please don't forget to use our free link to send you on over to the Reddit page where we'll be posting, as well as checking out our link at allstocktrades.com with a 7-day free trial of our stock terminal, or if it interests you, the Mastering Stock Market course. I will see you on the next one.